Good afternoon, and welcome to the end of week market review for Friday, May 10th, 2013. As you can see by looking at our market barometers, we've got rising bullish market conditions on both the US and Canadian side. Looking at our agenda, you're going to see that we're covering a few things. First off, we're going to be taking a look at the market news. We just want to get an idea of what's been going on in the US markets and how it's been affecting its trading days. We're going to take a look at some economic reports. This is going to be one of the more significant pieces of data that we look at on a weekly basis. Once we've done this, we're going to go over and take a look at some technical analysis charts. While we're doing this, we'll be looking at both daily and weekly charts, both short-term and long-term. We're then going to go to our volatility indicator and see how the volatility in the market is. Finally, we'll go through and review one of our great picks. So we could see that the US markets have now risen for 3 weeks straight. There was a little bit of a lull in the middle of the week, but it was only one day of sideways trading. It did manage to move the MACD into a flat bullish indicator, but obviously the markets are all back to rising bullish. All in all, the Dow Jones is currently up 0.97% from last week's close, with the S&P 500 up 1.19% from last week's close. Taking a look at some of our commodities, you can see that all of our commodities that we look at, both oil, silver, and gold, are all down. We've got oil down 0.66% from last week's close. This puts it to $95.67 per barrel. We have silver down 1.20% from last week's close. This puts it to $23.80 per ounce. We have gold down 1.56% from last week's close. This puts it to $1,470 per ounce. Finally, when you look at the US-Canadian pair, we are up 0.01% from last week's close. This puts it to 1.0101 pips. Now, right now we're looking at some economic reports. The most significant thing that we like to look at on a weekly basis is the initial claims, or the jobless reports. We could see that they were expecting 340,000 filings, but we ended up with 323. This means that we had a lower than expected jobless report. Obviously, we had more people employed than not employed, and that pushed the markets up. Whenever we see an increase where we have 340 or more, then we would be looking at a little bit of a decline for the day. So this was a great thing to have. Definitely more fuel for the fire that's been pushing the markets. Right now we're looking at the S&P 500. You're going to see that we're looking at about 6 months worth of data on a daily chart. The most important thing to notice here is that last week it did break up above this cycle high, and it is now continuing its rise upwards. We really don't know how long it's going to continue this trend. We just know that it has been. It definitely looks like it slowed down a little bit, but we've got a rising bullish market condition, so it could really keep on going. Looking at the S&P 500, you're going to see that when we look at a weekly chart, here we're looking at about a year worth of data. Here we've got just continuous rise. It looks like the markets are just going to go for no end. And this really becomes apparent when we look at data all the way back to about 2003. Right now, we can see that although we've had a high period here about 3 or 4 years ago, we haven't had any type of other reference where the S&P 500 has been above 1600. So these are some very interesting times. It's very difficult to predict just how long the markets are going to do what they're doing. Obviously, we had our large decline here in 2008, but since then, we've pretty much only had uphill trading. Yes, we've had weeks or even months where the markets have been down, but when you look at the big picture or the big scheme of things, the markets are just rising non-stop. And it begs the question, is it possible that we'll be seeing the S&P 500 break into a 2000 mark here? That would certainly be something to witness. Now here we are looking at the Toronto Stock Exchange. You're going to see that we've broken up some overhead resistance a couple of days ago, but we're now looking for some overhead resistance here around 12,680. That was the bottom of a cycle before it broke down and had its large decline. Very possible that we'll see the TSX follow suit and work itself up. We've got rising bullish market conditions. All in all, everything that we need to see some breakthrough resistance. While looking at the TSX on the weekly chart, you're going to see that it's had a great run. It does have a little bit of cycle highs that it has to break through. Actually, quite a few. It's not looking nearly as strong as the US markets. However, the markets are rising right now, and that's what's important. But obviously, if we look at our data back to 2003, we've got a lot of ground that we need to cover before we could say that we're at absolute highs like the S&P 500. We would need to see us break up about 15,000. So definitely a lot of ground needs to be covered before we experience that. All right, looking here, we can see that the volatility indicator is currently at 12.57. This puts it down 2.18% from last week's close. If you look at what's been going on statistically between 2013, we've got an indicator that is typically between 12 and 14. So the indicator is definitely right where it normally is. We don't need to be concerned with volatility right now. All right, and here we're looking at one of our great picks. The one we're looking at right now was from our US ITL. We have STLD. It showed up on our filters on May 7th, 2013. After figuring out where our entry prices and profit targets would be, we ended up having a order fill and sell the next day. All in all, we ended up creating a 1.20% profit. That's 1.20% that was yielded in just one single day. If you'd like more information about our ITL picks, you're going to want to take a look at our email or our phone number. We'd be more than happy to explain how things work and how you can take advantage of these picks as well. You're going to see that the track record has an incredible success rate, so you'll definitely want to keep an eye on that. So with that said, whenever you're trading, you want to make sure that you're always following back on your predetermined trading disciplines. Any trading decisions that you make are your own, so always make sure that you're exercising caution. This has been the end of week market review for Friday, May 10th, 2013. Ciao for now.